All right, so the webinar is now being recorded. My name is Montina Portis, and I'm the moderator today for Understanding a Federal Tax Lien, What is it and what can I do about it, hosted by Coleman Walton Law Firm, Atlanta bankruptcy and tax attorneys. So our attorney that will be answering your questions today and providing the information is Josie-Harris Walton with Coleman Walton LLC. She is one of the managing partners of Coleman Walton. She's a native of the state of Alabama, and while completing her business administration degree from the University of West Alabama, she served in the United States Army Reserve. She attended law school at Samford University, Cumberland School of Law. She also earned her legal master's in taxation from DePaul University College of Law. During her time at DePaul, Josie volunteered as an attorney at the Tax Care Clinic, a nonprofit organization focused on helping low-income taxpayers with disputes against taxing authorities. She also worked at the Internal Revenue Service. After graduating from DePaul, Josie gained invaluable work experience as a tax attorney at Deming Parker Law Firm and as a senior consultant at Strategic Tax Advisors. She now specializes in strategic tax planning and tax defense. Now, with Josie, we are now going to get started. And again, for those of you that are joining, please put your answers right in the chat box, or we'll have time at the end that you can just ask your question. The whole focus of this webinar today is to help you understand a federal tax lien, what it is, and what you can do about it. Again, my name is Montina Portis, and I am your moderator for today. So again, the webinar is hosted by Coleman Walton Law Firm, Atlanta bankruptcy and tax attorneys, and I'm going to go ahead and get us started here. All right, and so now, Josie, I'm passing everything along to you.
Okay, thank you, Montina. Thank you for the introduction.
We're
going to talk about, I'm sorry, go ahead.
You're welcome.
Okay. First, we're going to talk about what is a federal and state tax lien. So when the federal or the state Department of Revenue puts a lien on your person, which means on your business property. So that could be copyright, stocks, trademarks, patents, your customer list. It could be your accounts receivable, anything that they can attach to the lien so they can get their money or any interest in the land or the property or any kind of property that you have in your business. They use that to, just in case for some reason you sell your business. What they will do is they will get their particular amount of money. What you owe them for the tax debt, they will get that money when you sell the business. So that could be any kind of property that's dealing with your particular business. What happens is when the federal or the state Department of Revenue or either the IRS, they put a lien on your property, they have to send you what they call a notice of federal tax lien or a notice of state tax lien. If they do not send you that particular notice, then the tax lien is invalid. So you need to make sure that when you receive or when you pull your business credit or you're trying to get a loan from a bank or somewhere and they say, you have a tax lien on your property or on your business, you make sure that you receive that particular notice, because if you don't receive that notice, then the lien is considered invalid. So we want to make sure we also do that. Now let me tell you the difference between a federal and a state tax lien. With a federal tax lien, that comes from the IRS, the Internal Revenue Service, that's the federal government. And with the federal tax liens, there are different things. For instance, with federal tax liens, you can have certain things, the tax lien removed after a statute of limitations of 10 years. But with the Department of Revenue for Georgia and state tax liens, it's possible that lien could be on your credit or on your business credit indefinitely. So when you get a certain lien, you got to know exactly what kind of lien you have on your credit, the tax lien on your credit, and then you need to know what to be able to do. And so the first thing you would do is you would verify that you have received a notice. The second thing you want to verify, was it a federal tax lien or is it a state tax lien? And then you need to find out whether or not the notice was properly delivered to you, and then you start the process of trying to either pay off the tax lien with either doing an installment plan and offering compromise, or whatever your business can actually do at that point, whatever dispute it would be. And then after that, and also there's a difference between a federal and a state tax lien. Is with a federal tax lien, once it's paid off, well, either one of them, once it's paid off, you have to actually contact the credit agencies, the business credit agencies, to advise them that that lien has been paid off. You know, most liens, or like if you have just a regular creditor lien, that lien, you know, once you pay the debt off, it's removed. That is not how it works when it comes to state and federal tax liens. You have to actually get a notice from the state and the federal government saying, okay, this lien has been paid off, it has been satisfied. Then you have to send that particular letter to the Business Credit Bureau in order to get that lien removed. So that's kind of the information on federal and state tax liens. So the next question will be, how are the federal and state tax liens different from any other type of lien? Just like I said before, with a federal or a state tax lien, you have to pay off the lien or either get some kind of satisfaction letter, and then you have to submit that to the credit bureau agencies in order to have it removed. The IRS or the state will never remove a tax lien from your credit report. And people always ask me, you know, I've paid off this debt, I still have this lien on my credit report. They don't realize that they have to actually contact the credit reporting agency, the business credit reporting agency, and have that lien actually removed from the credit agency. Also, another thing which is a big issue regarding federal and state tax liens compared to other type of liens, other creditor liens, is that the IRS or the state does not have to take you to court in order to file a tax lien on your property. You know, for other liens you have where they actually have to go to court, they have to get a judgment against you in order to file any kind of lien on your bank accounts, on your property, on your accounts receivables. But when it comes to the IRS or the Department of Revenue, all they have to do is provide you a copy of that notice, and they don't have to actually, the notice doesn't have to actually come to you, but it's got to be your last address. As long as they can show that they mailed that particular notice off to your business, either, you know, whether your business moves or not, and they mailed it off to you, they can actually file a tax lien on you immediately. They don't have to go to court to do that. So those are kind of some of the different things regarding federal and state tax liens that are different from any other liens. And also, with a federal tax lien, you know, with a regular lien, you may be able to sell your business. You may be able to sell or transfer any assets of your business. You may be able to get a refinancing or a business loan. But when you have a federal or a state tax lien on your credit, your business credit, they will not, you know, it's very hard to get any of those. You can't sell your business because you're, of course, a buyer is not going to want to buy a tax lien. And you can't transfer assets of your business because if you do that, that's considered a taxable event, which means that if you get any money from that, the IRS automatically can retrieve that money to pay your tax debt, as well as it's very hard to get any kind of business financing, any loans or anything like that when you have a federal tax lien because, of course, banks are not going to touch it when they know they can't be the first creditor on your property. And that's another thing. When the federal and state submits a tax lien to the county, they're now considered the first creditor, period. They are always the first creditor. So that's kind of, you know, a nutshell of, you know, the difference between federal tax liens and any other type of lien. The next thing we want to talk about is what are the damages on having a tax lien? And we just talked a little bit about that. You know, of course, we know that tax liens are totally different from any other creditor lien. These things can affect your business credit. It's similar to, a tax lien is similar to bankruptcy because it limits you from doing anything. I mean, it limits you from selling your business, from, you know, getting any kind of loan. And when they also put liens on your credit, all your assets, any future assets you may acquire. For instance, just say your business decides that, you know, your construction company, your business decides that they want to purchase equipment. If you have a lien on your credit, automatically, if that particular equipment comes into your building or comes into your business, automatically there's a lien on that particular equipment regardless. So that, that's huge when you are buying additional equipment and you have a tax lien or a federal state tax lien on your credit, as well as with your business, for instance, your accounts receivable. So, you have clients or customers who owe you money, and there's a lien there. Now, true enough, the money will come to your account, but they can also contact your customers and advise them that there's a lien on that particular money, and that money needs to be held in order to, to satisfy the IRS debt. So that's a big issue. And also, if you decide to file bankruptcy, you may want to file, a business bankruptcy because you may not be able to afford, have your business anymore. Well, if you have a tax lien, people would think that tax liens, will be removed after they come out of bankruptcy. Yes, if you paid the amount off, but if you haven't paid the tax debt off, then no. You still have that lien after you come out of bankruptcy, because I have a lot of clients say, I filed business bankruptcy or I filed Chapter 7 bankruptcy, and I still have this tax lien. Well, sometimes we'll find out that they didn't, provide the proper documentation to the creditor agency, but also we also find out that the tax liability has not been fully paid off by the bankruptcy, and they still have that tax lien, so they have to go back and satisfy that tax debt. So those are some of the things that can really damage your business with having a tax lien. So the next one is, why do the federal and state departments file so many tax liens? The reason why the federal government and the state file so many tax liens is because they're trying to they have to provide a legal claim against your property, because what they're trying to do is to say, make sure that this business doesn't do anything else without, or getting any kind of money or any kind of assets without the IRS or the federal government getting our portion first, because as I said before, they are considered the first creditor. So they want to make sure they're protecting and that's what they call it, protecting their interest, protecting the government's interest. So, and they feel like that if they don't file this particular tax lien, that you can go out and you can sell your business, or you can get a loan, you can do anything, you can move on without paying your IRS debt. And a lot of this has to do with payroll taxes. Payroll taxes is a huge issue when it comes to federal and state Department of Revenue, because of the fact that they feel like, you receive this payroll money from your employees. You also have to pay your portion of the payroll taxes, and if you don't submit those particular taxes to the IRS, they feel like you've stolen from your employees. So they're saying, these people should not be able to have additional assets. They should not be able to have loans, and we need to make sure we protect our interests, because at this point they feel like, if you stole from your employees, which that's not the case, that you probably won't pay the IRS their debt. So they got to make sure they secure their particular tax debt. So, that's the reason why they file so many tax liens. And there's a huge amount of tax liens that are put on people. And they, like I said, you have about 10% or 10 to 20% are more actually filed incorrectly. So that's why you need to make sure that you are talking to a tax attorney, or you're actually verifying that you received a notice and it was proper, so that you can make sure that, your tax lien was, that, it was properly put onto your property. So the next thing we're going to talk about is how to get rid of a tax lien. And a lot of my clients ask me about, okay, can I get rid of this tax lien even though I owe this money to the IRS? And I say, yes, there's a possibility you can actually get rid of a tax lien without paying all of the debt up front. The best program that the IRS has came out with right now is what they call the Fresh Start program, and it is used for small businesses. What happens is you have to meet 6 criteria, and I'll tell you what those criteria are in a minute. But you have to, first of all, have a payment plan set up with the IRS. You have to have had your tax debt down from whatever it is, down to $25,000 or less. And you have to be able to pay off the tax lien within 24 months. So just say, for instance, you really need to get a loan, or you really need to sell your property. You may be selling some kind of property, but you can't sell it because you have a tax lien. The best thing to do is to try to get your tax debt down, $25,000 or less, and then we work out some kind of installment plan. Now, when you do the installment plan, you have to set it up either via credit card or some kind of ACH debit, because the IRS needs to be able to get this money immediately from your paycheck. You can't just send in a check every month. Also, you have to be able to you have to be able to pay correctly, or I guess efficiently, 3 months. So let's talk about the 6 criteria. The first criteria, you have to be a qualified taxpayer, which means that basically you have to be in file taxes, or you have to have an EIN number, you have to have a Social Security number. You cannot owe no more than $25,000, so you need to get your debt down $25,000. You have to set up what they call a direct debit installment payment. Now, if you have an individual tax lien, then you have 60 months to pay off the debt. But if you are a small business and you have an EIN number, you have to pay off the debt within 24 months, which is 2 years. You also have to be in compliance with all of your payment filing requirements. That's payroll taxes, sales taxes, anything of that nature. You have to be in compliance with those. You also have to have filed 3 years of your past 3 years tax, so you have to file individually as well as business. All 3 years, the past 3 years have to be filed with the IRS. You have to have made at least 3 consecutive payments in a direct debit payment plan, which means that you have to either have the money coming directly out of your checking account or directly out of the credit card. And you must have never been in default when it comes down to a direct debit installment payment, which means that, you set up an installment plan before, the IRS had a direct debit payment installment plan, and you actually you were in default of that installment plan. So those are the 6 criteria. And once you've met all those criteria, so what you need to do, if you're planning on either selling your business, you're planning on buying new equipment, and you want to have that tax lien removed, or you're trying to get a loan, you need to either have all of this done within 6 months of purchasing that new equipment, selling that business, or either getting that loan. So what you need to do is talk to a tax preparer, a tax attorney, or, just something that you can handle yourself. I wouldn't recommend it, but talking to a tax attorney and 6 months prior to you doing anything that you need to do so that all this stuff can be done, you can be in compliance, and then at that point we can ask the IRS to remove the tax lien. And then what you do is you continue to make your payments, and as long as you're making your payments, the tax lien will be removed from your credit report. Now, let's talk about, if you're wanting to refinance or get a new mortgage, this can be individually, or this can be, you want to get property for your business. Well, of course, you can't do that because you have a tax lien, and most mortgage companies or loan companies are going to say, well, most of them are going to say, okay, well, you have a tax lien. So, we can't refinance your mortgage, or we can't give you a mortgage or do a modification on your building that you have because you have this tax lien. And as I said before, the IRS is the first creditor on any property that you have. What you can do, there are 3 things that you can do. You can discharge the property, which means that you can remove the lien from a particular property. The way you do that is you have to, like I said, everything needs to be done within 6 months. So if we do all the Fresh Start program, that's called discharging the lien from the property. So we can discharge that by doing the 6 things that we need to do in order to be compliant, so we can get on the Fresh Start program. We get the lien discharged from the federal or the state agency, and then you end up we ask for a discharge of the property, which means they remove the tax lien from the property. The next thing you can do, just say, for instance, you want to refinance and you want to do a mortgage modification. Because the IRS is the first creditor on your property, you can actually have the IRS to be a secondary lender. Now, like I said, you need to always do this 6 months prior because it takes the IRS a long time to get all this stuff processed. And what happens is the IRS will remove the tax lien. They will add on the mortgage company or the refinancing company, the loan company can add themselves as the first lien holder. The IRS will add themselves as a second lien holder on your mortgage or on your refinancing of a loan or anything that you need to have done. But like I said, this process takes a while. You need to talk to a tax attorney at least 6 months prior to you wanting to do anything like that. The last thing will be withdrawal. So basically, with the withdrawal, it's basically saying that we're going to totally withdraw the federal or the state tax lien. Most of the time, the way you get a total withdrawal is that you actually pay the debt off. The IRS have decided they're going to do the Fresh Start program, which we just talked about earlier, and they can withdraw a federal tax lien or a state lien if you are actually in the Fresh Start program, which means you have to be a qualified taxpayer. You have to owe less than $25,000 on the tax liability. You actually have to set up a direct installment payment. You have to be in compliance with your payroll taxes. You must do 3 consecutive direct payments on time, and you must not have been defaulted on any loan. Now, they will do a withdrawal. This is the thing. With the withdrawal, I have not saw that often because what they will do is they rather do a discharge, which means they just discharge it until the debt is paid completely off. With the withdrawal, if they withdraw the tax lien, then most likely the IRS can't put it back on because they withdraw it. So it's very rare situations where they actually will withdraw the tax lien unless you pay the full amount. Now, also with all of these different things, you can also set up maybe an offering compromise. That is where you settle the debt for a lesser amount. Now, you have to qualify to do that. If you have any property, if your business is doing very well, if you're individual and you have a salary and the IRS feels like for the next 5 years you actually can pay that debt, they will not give you an offering compromise. So you have to, talk to an attorney. Like I said, always do everything about 6 months prior. See if you qualify offering compromise. If you do qualify, then you can submit your documentation for a settlement. And if they settle the debt, they will go ahead and withdraw the notice of the federal. They will withdraw the federal tax lien. So those are things that you actually can do. So you can do the installment plan, you can do an offering compromise if you qualify, so that you can either do a discharge, a segregation, or you can do a withdrawal. The next question is, how long is a federal or a state tax lien valid?
And Josie, I'm just going to jump in here very quickly. This is Montina Portis. I'm the moderator for today. And while we're halfway through the slides, Mrs. Josie-Harris Walton has given us a lot of information about the Fresh Start program. There are notes within the chat box here that I've set up, and there should be notes wherever you're watching this video beneath the video. But I'm going to tell you, it's a lot of information, so I at least wanted to pause to make sure that you knew how to get in touch with Josie. You can call her directly at 404-594-5393 or visit her through their website, thecwlawfirm.com. And again, if you need additional information about the programs, please make sure that you pick up the phone, give her a call, go to the website. There's a chat function there. We can capture all of your information and send it directly over to the firm. Again, you are watching or listening to Understanding a Federal Tax Lien. What is it and what can I do about it? Hosted by Coleman Walton Law Firm, Atlanta bankruptcy and tax attorneys. So once again, Josie, I'm passing it over to you.
Thank you, Montina.
You're welcome.
Okay. Let's talk about how long a federal or state tax lien is valid. Now, as I told you before, you need to make sure that you receive a notice of a tax lien. That automatically makes it valid, unless, you don't owe a debt and the IRS has made a mistake. But it's a strong possibility that an unpaid tax lien will stay on your credit forever. It will be on your credit report, your business credit report forever, or either your individual credit report. Now, they do talk about, and this is just a kind of a caveat, but tax liens are only supposed to be enforceable by the IRS on a 10-year lifespan, which means that if, for instance, you filed your tax return, let's say in 2002, and this is 2015, so your tax was assessed in 2002. Where right now, that means that's 13 years. The IRS puts a tax lien on or the state puts a tax lien on your property. You can actually dispute this and say, this has been 10 years. The statute of limitations is 10 years for federal tax debt. Now, it's 7 years for a Georgia tax debt, but I have to let you know about the Department of Revenue's their procedures. But for a federal tax lien, it's 10 years of a lifespan, which means a 10-year statute of limitations. Now, most of the time, if you were to send a letter and say, I'm disputing this particular issue, the tax lien is over 10 years, the IRS will deny it. They will keep denying it. You will go to appeal. They will deny the appeal. You will have to go to tax court. The only way that I've seen where you can actually remove a tax lien that has been over 10 years or a debt that has been over 10 years when you have a tax lien on your property is if you actually go to court. If you just, most of the time, like I said, the IRS procedure is not to remove a tax lien. They will leave it on your credit forever as long as it's not paid. They leave it on your business or individual credit forever if it's not paid. Now, Georgia, it's supposed to be 7 years. Georgia will do the same thing. They will leave it on your credit report forever if you do not go to court. You're not going to be able to resolve this issue with an appeals officer. You would have to go to, now Georgia has what they call the Georgia Tax Tribunal. They used to didn't have a tax tribunal. You had to go straight to state court. But now they have a tax tribunal, which is an awesome program that started in 2011, which means the best thing for you to do, if it's over 7 years for Georgia on a tax lien, I would take it to the tax tribunal. And there's a form you fill out. You would actually set a court date, and you would advise them that this particular lien or this tax debt has been over 7 years. And per statute, it should not, the lien is owed at that point. So actually, if you want, how long is a federal and state tax lien valid? It's valid forever unless you actually dispute it or unless you actually pay it off. Or for number 8, we talk about can a tax lien be removed without full payment. And we talk about now with the Fresh Start program. In 2011, we had the Fresh Start program, which we're talking about again. That is the best way to remove a tax lien without full payment, is to go through the Fresh Start program. Like I said, you can go through the Fresh Start program, set up an installment plan with the IRS, make sure you owe less than $25,000, you are a qualified taxpayer, you have a direct installment agreement, you actually have filed within the last 3 years, all of your tax returns within the last 3 years. And so that's what you want to do. You want to make sure that you're taking advantage of the Fresh Start program. Also, if you're insolvent, if your business is insolvent and you know that you cannot pay this particular tax debt, you do need to try to do some kind of offering compromise and do some kind of settlement with them. And then once you've got approved for the settlement, then at that point you can actually ask for the tax lien to be removed. So when I talk about can a tax lien be removed without full payment, yes, it can. It can be removed without full payment, but it has to be done in such a way that, like I said, with the Fresh Start program, with the offering compromise, so that the IRS will never put that lien back on your credit again. And then also, you may not have the money to be able to pay the full debt off because, of course, you got interest and penalties. So if you work with the IRS and do the Fresh Start program or the offering compromise installment plans, then you actually can have that lien removed. But like I said, you have to do it at least 6 months, and you have to meet the 6 criteria. That is very important that you meet the 6 criteria, because if you don't, the IRS will automatically deny the removal of the tax lien. All right. And then there's another, we talked about, is it possible to get rid of old tax liens? Well, we just talked about that. Yes. If the tax lien is over 10 years for the IRS, then you actually can have the tax lien removed. If it's 7 years, owed for the state, the Department of Revenue, it can be removed. Now, if you have a business that's not in Georgia, there's the years could be different, but federally, it's 10 years. What you have to do is you have to, submit a letter saying you're disputing your tax lien because your tax lien is over 10 years old, your tax debt is over 10 years old. The IRS will most likely deny your dispute. They will give you 30 days to appeal to the appeals officer. You will send another letter saying you're appealing to the appeals officer. If the appeals officer denies your dispute, then they will actually submit it to their supervisor. If the supervisor denies the dispute, most likely you're going to tax court. And that way, when you go to tax court, you can actually, I've seen many court cases won once you get to tax court. But the IRS feels like a lot of people are not going to go that route. They don't want to afford a tax attorney to go to tax court. And so most people just say, okay, I'll just leave a tax lien on there, even though it's 10 years old, or for Georgia, it's 7 years old. With Georgia, you want to make sure that you file a dispute with the Department of Revenue. They're going to do the same thing. If they deny it, then at that point, you get to appeal it. Once you appeal it, the Georgia Department of Revenue does not go to the supervisor. It goes directly to, they're denying it. There's nothing else you can do unless you decide to, then you have to petition the tax tribunal in order to get your case heard in the Georgia Department of Revenue's tax tribunal. If the tax tribunal denies your case, which, like I said, I've seen a lot of cases, and if it's over 7 years and if the tax has been assessed for over 7 years, most likely you will win your case. If the tax tribunal, you don't win your case with the tax tribunal, you still have the option to go to state court for Georgia. If you don't win at the United States tax court level, you may have the option to go to federal court. So there's so many options with getting rid of an old tax lien. But like I said, I don't see very many cases where they get rid of them on the IRS level or the Department of Revenue level. It normally has to go to court. Now, the last one we're going to talk about is very, very important to me because people always ask me, my clients always ask me, what's the difference between a tax lien and a tax levy? A tax lien is where the IRS, of course, puts a tax lien. They can contact the county that your business or you are a resident of, and then they actually put a lien. They say, okay, we are now the first credit holders. If anything gets sold, anything happens with this particular business, we're the first person you need to notify because we are the first creditors. We need to make sure that the government interest is taken care of. Now, if you get a notice of tax levy, well, what they call is a notice of intent to levy. The notice of intent to levy, you actually have 30 days to appeal that notice of intent to levy. If you do not appeal that notice of intent to levy and you don't contact the IRS or the Department of Revenue, you will have a levy on your bank account, which means that you cannot get, with a lien, you can still get money out of your bank account. You can still use your property. You can still use your equipment. If once they put a tax lien levy on your property, you cannot touch that without the IRS approval, which means that you have to have that levy removed. Now, the main thing I hear is the bank account. A business will be getting ready to pay their payroll taxes, and then the bank will tell them you have a levy from the IRS or from the Department of Revenue. You cannot touch your money. You need to contact one of the, they'll give you a number to contact the Department of Revenue or the federal government or the IRS, and then you have to work that out. Most of the time, this can be worked out probably within a week. But just imagine not having payroll for a week. So if you get a notice of intent to levy, you need to be contacting someone immediately, or a tax attorney, or you need to be contacting the IRS to say, what's going on? What can I do? Because at this point, they're trying to get your attention by sending you that notice of tax levy. Now, I've seen where they sent notices of tax levy out, and they've already put a levy on a bank account. That has happened before. And what they do is what happens is they tell the bank to hold your money for 30 days. If you haven't resolved the issue within 30 days, then automatically any money that you have in that particular account will go to the IRS. That's normally how the IRS works. with the Department of Revenue normally will send you a notice of tax levy. Then you have to contact them, and then if you don't contact them and get it resolved within 30 days, they will automatically contact your bank. And that's the main thing, is bank, or if you are an individual or you're a business owner who has W-2 wages, they can actually file a levy against your wages. Those are the main ones I see. Now, most of the time, a lot of people ask me, okay, Josie, can they actually take my home, or can they actually take my property, my business property? Yes, they can. Most of the time I don't see that unless it's a payroll issue. If it's a payroll tax levy, yes. I've seen them shut down businesses for not having to pay their payroll taxes or the sales taxes. But if it's income, then most of the time what they will do is they will, try to work it out with you and not take over your property. And especially if you're a home-based business, I don't know if anybody's on the line that is. If you're a home-based business, of course, your business is located in your home. So if you have a levy on your property and the IRS decides they're going to come in and take your business, they're taking that home, because that's where that's the principal place of business for your home, that's the principal place of business for your business. So you want to make sure that you, like I said, it's so important. The tax lien it's very important. You need to have those removed if you are a business, because it will affect your business credit score. You can't get a loan. You can't sell your business. You can't transfer assets. It's a lot of things you cannot do in a business. But when you get a levy on your business, a levy on your bank account, a levy on your wages, a levy on your property where they're saying they're going to sell your property, you have closed down your business. So if you get a notice of tax levy, you want to make sure that you are contacting an attorney, or you want to contact the IRS or the Department of Revenue to get that resolved. Now, the last thing I want to talk about is with the Department of Revenue when it comes to tax liens. Remember I said that you have to have at least the past 3 tax returns filed in order to have a lien or a lien removed. Well, what happens is, even if you pay off the debt with the Department of Revenue, they still will not remove your lien if you have not filed your tax returns, your previous tax returns. I had a case a couple of months ago. She paid off the debt, but they still would not give her they wouldn't let her pay off the debt because of the fact that she had some tax returns that needed to be filed previously. So they told her, it doesn't matter. You pay off the debt, we're still not going to remove the lien because you still owe this money. Now, what we went back and did was, Georgia Department of Revenue has collection agencies that they work with. It's Bass and Associates, Financial Asset Management System, IC Systems, Inc., and Professional Recovery Consultants. Those are the 4 revenue collection agencies that the Department of Revenue works with. What happens is, if you receive a letter from Bass and Associates or either one of these collection agencies, that means you have a debt with the Georgia Department of Revenue. Most likely you have a tax lien, and now the collection agencies will try to collect the money. Now, what we did was we went ahead and we paid the tax debt to one of the collection agencies. When we did that, automatically the Department of Revenue had to give us a copy of the release saying that the tax debt has been satisfied. When we did that and we got that letter from the Department of Revenue, we were able to contact the credit reporting agencies and have that lien removed. So there's another way of maneuvering around. Don't get me wrong, you should file your tax returns, but just in case you haven't and you really need a debt removed when it comes to the Department of Revenue, because they're very stickler about things that they will not do, that's a way of getting around it. So just think about that. But what you need to do is make sure you have a awesome tax attorney, that can handle these particular issues, because those are things that, you would have never known. She would have never known that she could go a different route and still get that tax lien removed from her credit report. So that's pretty much all I have regarding federal and state tax liens. And does anybody have any questions? Or Martina, you want to take over from here?
All right. So I have the information here. Didn't have any questions right here in the chat box. And once again, if you have questions, call Josie directly after you're listening to the webinar, whether you're live or you're on listening to the replay, or you found us on one of our sites. You can call her at 404-594-0000. 5393, or visit the website, thecwlawfirm.com. Or if you see here where it says click here, that means that you can click right there and you're going to go to the site to learn more information and also download the content available there. Now, if you want to go ahead and request a free consultation, again, that's with Josie-Harris Walton of the CW Law Firm, and they are Atlanta bankruptcy and tax attorneys right here in Georgia. So I'm going to go ahead and just take you back to where they have their information so that you can get an idea of who you're talking with today. Again, Coleman Walton Law Firm, Atlanta bankruptcy and tax attorneys. Since we don't have any questions here in the box, don't have any directed over to you, Josie, I want to thank you for hosting this educational webinar. I can tell you, even as I was listening, I thought this sounds scary, and so I know that those listening to this need to call you, because I'm sure that once they receive that tax lien, that they were scared. Oh, you know, it looks like I got a question coming here. Okay, there is one question. Good. How can I avoid a tax levy? How can a person avoid the tax levy? Or tax lien, Josie. Sorry about that, the tax lien.
The way you can avoid a tax lien is you need to go ahead and set up an installment plan or some kind of offering compromise with the IRS or the Department of Revenue prior to the tax lien being placed on your property. Now, what I found out is with businesses, if you owe any over $10,000, they will automatically put a tax lien on your property. If you're an individual, it's about $25,000, and they will automatically put a tax lien on your property. But most of the time, if you contact them, try to set up an offering compromise or some kind of installment plan. You have some representatives who will work with you. But like I said, if you owe more than $10,000 as a business, so the IRS can protect their tax debt, they will automatically put a lien on your property.
All right. Well, great one. Once again, Josie, thank you so much for hosting this webinar today. And again, for those of you listening, you can find out more information at thecwlawfirm.com or call her directly at 404-594-5393. At this time, we're going to go ahead and end the webinar. Once again, Josie, thank you so much.
Thank you, Montana, and thank everybody for joining the webinar.